okay, baby, nothing really lasts forever. For now, let's run towards the sun. Think it'd be better if you don't let me.
Assalamualaikum and hi everyone. My name is NORSHAZWANI binti AZIZ. My metric number 280574. So now I will start our presentation with the introduction of this topic, which, as we know, in the year 2020, COVID-19 has spread globally and have significantly given an impact on the global economy, health and other aspects. This research will focus solely on how the COVID-19 pandemic impact financial market and institution, and consequently the actual economy. Thus, the emphasis of this paper will be on comparing Islamic and conventional banking in terms of deposit and lending. One of primary distinction between conventional and Islamic banking system is that Islamic banking prohibit usury and speculation, where conventional banking has no guiding principle. The Sharia prohibit all form of speculation and wagering known as maisir. In addition, Sharia prohibit charging interest on loan. Also prohibited are investment involving item or substance prohibited by Quran, such as alcohol, wagering and swine. Islamic banking can thus be viewed as a culturally distinct form of ethical investing. Furthermore, conventional banks are in the business of lending and borrowing money based on interest, where Islamic banks are not money lending institutions, but rather trading and investment firm. We can conclude that Islamic banking has a smaller impact on the COVID-19 pandemic than conventional banking. Most of the conventional bank financing and deposit products are loan-based. In contrast, Islamic bank view loan as non-commercial and exclude them from the realm of commercial transaction. Interest-free loan must be provided by Islamic banks. For the deeper understanding about this topic, I will pass to the next presenter.
Thank you to the previous presenter, Wani. My name is Sofina binti FAZILAN. My metric number is 28015. Next, I will proceed with overview of the topics. As you all know, governments globally use social distance to national quarantines to contain the initial spread of COVID-19. These regulations impact the economy and revive concerns about banks' ability to lend during difficult time. Despite the various negative effects, banks must maintain adequate liquidity to mitigate risk. A properly functional banking system stimulates economic growth. Islamic and conventional banks utilize resources, seek attractive investment possibilities, and exert governance and corporate control. The extent to which conventional and Islamic banks are equipped to deal with the COVID-19 pandemic will depend on factors like their respective business models or corporate governance. Islamic and conventional banks both rely on depositors. Depositors' funds increase bank capacity for operations and shareholder profit. Apart from that, the presence of COVID-19 affects borrowers' ability to repay loans. The drop in bank lending could be due to a decrease in loan supply or a decline in loan demand. After the COVID-19 epidemic, both Islamic and conventional banks saw huge growth deposit, but only in areas with reduced unemployment. This increase happened only when households experience a large reduction in spending at the same time. In general, COVID-19 has reduced bank loan demand by making banks more cautious of defaults and bad loans, which can worsen problems in difficult times. That's all from me. I will pass to the next presenter.
Hello and Assalamualaikum. My name is SHUHADA binti MOHAMAD ZAUDI, metric number 280573. I will be continuing the presentation with the literature review, which for this literature review, we have chosen 5 articles that related with our topic. So the first article is Islamic Bank Deposits During COVID-19 Pandemic, a Special Finance Approach by Ahmad Tirmizi, Sony Wicaksono. The pandemic COVID-19 was a contributing factor to the volatility that was seen in the financial sector, which in turn had a negative impact on the banking sector. Based on what Ahmad Tirmizi has mentioned in the article, deposits in IRB were measured using factors like COVID-19, RGDP, regional consumption, capital financing, investment financing, and assets. This was done based on the special finance method. Special methodologies encourage banks to enhance the caliber of their services within the banking sector by cartographically representing financial services, thus optimizing the role of intermediary institutions. The banking sector entered a new era with the implementation of the special method, which considered financial risk based on location. Since regions have different capabilities to receive and respond to external and internal influences, studies in Canada, Kuwait, and the US have used a special finance approach to measure the effect of geography on financial and banking performance. And I think that's all from me. Thank you.
Assalamualaikum and hi, my name is Nabilah binti Muhammad Hafiz, metric number 280745. Will continue the presentation for literature review. So in the second journal would be Bank Lending During the COVID-19 Pandemic, a comparison of Islamic and conventional banks by Narges Bookberry, Ali Mirzai and Mohsin Said. So, according to this journal, they discovered the lending growth of conventional and Islamic banks were reduced during the early stage of the COVID-19 crisis. Besides that, they also found about the sustainability of loan growth for Islamic banking during that pandemic, and particularly in nations with an established macroprudential framework, the credit growth for Islamic banks increased 2.5% faster than the normal banks. These findings suggest that the bank regulations in the years before the crisis influenced the lending practice of Islamic banking during recessions. The factors that influence bank resilience during downturns, particularly in dual banking systems where Islamic bankings and conventional bankings compete with one another, are very crucial. So, in this article journal, the point that we can pinpoint is during the early phase of COVID-19, bank performances, Islamic banks, macroprudential policies, bank lending, and credit growth. Next article journal would be the impact of COVID-19 pandemic on bank lending around the world. In this article journal, we found out that the study assesses the impact of the ongoing COVID-19 epidemic on global bank lending trends that causes a global drop in bank loan growth. I can give you an example. For the rise in illness because of the pandemic causes quarterly bank loan growth to fall by 0.20% globally, 0.21% in the US, and 0.87% in the rest of the world. This percentage represents a downfall from the corresponding sample average of US and non-US. Not only that, it has been discovered that the financial situation of a bank has a significant impact on how it would behave in terms of lending during this epidemic. To be more precise in this context, institutions with lower returns on assets, small, foreign and government-backed banks are most negatively impacted in terms of lending. Meanwhile, for strong institutions, they mitigate the negative impacts of the pandemic on the availability of bank loans. Continuing with the journal, the strength of the collective risk that is associated with pandemics affects the relationship between regulatory actions and bank lending, which rigorous regulation and oversight helps to mitigate the negative impact of the shock. Thus, appropriate bank monitoring is needed to receive more governmental attention that are vulnerable to macroeconomic and financial risks during this kind of time. For the contraction in bank loan growth, the decline in bank loan supply is less severe in impacting countries, where fewer enterprises are constrained by the supply of debt capital, especially the bank capital, and where firms can use a range of debt sources to borrow capital. Finally, the separation of the impact of demand on loan growth from the global fiscal and monetary stimulus program, as well as other government interventions that were designed to contain the virus but had detrimental effects, are making supply pressures principally responsible for the larger decline in loan growth experienced by treatment banks as compared to control banks.
Assalamualaikum and hi, I'm AMIRA AFRINA binti ABDULLAH with number metric 280293. I will continue our presentation with the fourth article regarding the determinants of Indonesia's conventional and Islamic bank depositor trust during the COVID-19 pandemic. In this article, they studied on the factors that had a significant impact on the Indonesian's depositors' trust in conventional and Islamic banks during the COVID-19 pandemic. They discovered that there is a relationship between internal factors, which is bank interest, and external factors, which is industrial production index, that affects customer trust and impacts how much money is deposited in conventional banks by customers. Additionally, they found that the amount of depositor funds in Islamic banks is influenced by both internal and external factors, including profit sharing and industrial production index as indicators of national economic conditions. However, the trust of customers in conventional banks and customer confidence in Islamic banks are unaffected by other outside factors such as inflation. And the last article with the topic of COVID-19 bank deposits and lending. The author of this article had examined a variety of matters in their study. Firstly, they investigated what caused the massive inflow of deposits into the banking system during the pandemic. The households accumulated bank savings because of the COVID-19 pandemic. They observed that the idea of forced savings was one factor encouraging households to place up deposits in their banks. Then, they noticed that the core deposit rose for banks operating in areas where spending had fallen more sharply. In contrast, higher exposure to the pandemic did not result in an increase in deposits for the banks with a lower reduction in spending. Aside from that, they discovered that the only bank with increased deposits were those that were situated in nations with a lower increase in unemployment. Next, they examined into how banks used the extra money to fund loans when the pandemic first started. Following that, the real estate loans were relatively increased by banks in countries with higher spending reduction. A possible explanation for the rise in real estate loans is the unforeseen rise in price and housing demand during the pandemic. Lastly, they discovered that the lending increased when high capital banks, which those with capital above the median, experienced a significant influx of deposits, but lending at low capital banks remained constant. These findings emphasize the necessity of bank capital for crisis loan provision.
Assalamualaikum and hi, my name is MOHAMAD ZUHAIRI bin ZULKEFLI and my matrix number is 280681. I will continue with our presentation with a part of disadvantages. During the COVID-19, Islamic banks and institutions appeared to be more resilient in terms of their ability to resist or recover swiftly from setbacks during the crisis. In addition, they have developed greater safeguards than conventional banks to protect their profits throughout the crisis. However, the greater operational expenses incurred by Islamic bank in comparison to conventional bank will not provide them with insulation, since they have the same basic disadvantages in terms of bank lending and deposit. So during the COVID-19 epidemic, banks with weaker capital ratio may be more cautious to extend their loans when they receive deposits. This might be explained by their desire to reduce risk-taking to minimize capital losses. Liquidity risk is caused by undrawn loan obligations, the withdrawal of cash from wholesale deposits, and the loss of other sources of short-term funding rather than by the use of demand deposit. So banks that were more exposed to this liquidity risk raised their holdings of liquid asset and reducing their ability to issue new loans. And because of worries about the liquidity of loans and securities assets, these banks sensibly safeguarded themselves by hoarding liquidity, putting their client and market at risk. The second disadvantages is banks will experience a surge in loan loss provisions and non-performing loans. Banks that are geographically more vulnerable to lockdown measure see a rise in loss provisions and non-performing loans. Non-performing loan (NPL) is a loan in which the borrower is in default and has failed to make initial principal or interest payment for an extended period. Economic activity was quite restricted during COVID-19. Many enterprises were forced to close or operate at reduced capacity, resulting in lesser income as a result, a diminished ability to repay bank debts. Individuals who have lost their employment or had their salaries decreased may also have difficulty obtaining financing or repaying their existing obligation. COVID-19 reduces bank profitability and performance. Given the appearance of the pandemic as an unusual external shock, we may anticipate banks to have some difficulty monitoring and adjusting cost levels. Furthermore, bank income levels are expected to fall as average economic activity declines, hurting all company sectors. As a result, an increase in bank costs and a fall in bank income levels will result in a higher cost-to-income ratio, making banks less efficient. The lockdown is expected to have harmed economic activity even more, as people who are major economic actors reduce their consumption as they were pushed to stay at home and maintain a social distance. The pandemic also has resulted in a major drop in demand for banking products and services. This, of course, will have an impact on the bank's operations, resulting in lower operating revenue. The net disadvantage is banks may face increased credit risk and increasing systemic instability. The COVID-19 pandemic has a greater negative impact on systemic stability for big, highly leveraged, riskier, high loan-to-asset, undercapitalized, and low net worth centrality institutions. The COVID-19 epidemic has made it more difficult for banks to analyze the credit worthiness of borrowers. The epidemic also will cause the money supply to fall, as well as the credit standard and lending rates to rise. The credit risk had also increased because of borrowers' failure to repay their bank loans. And last but not least, the last disadvantage is banks face the prospect of having to devote billions of dollars to repay debts because of the COVID-19 pandemic. The deterioration of the economy during the COVID pandemic increased the number of non-performing loans. The bank's balance sheets were also under strain owing to decreased profitability, mostly due to an increase in provision for bad debts, which result in the inability to repay loans during the epidemic.
Thank you to the previous presenters. My name is SHAFIQAH binti MUSTAFAR and my trick number is 280479. Next, I'm going to continue with the advantages of bank deposit and also bank lending. After the striking of COVID-19 in Malaysia, a lot of aspects in terms of financials, economic, tourism have directly or indirectly affected by it, including the Islamic and also conventional banking system. But prior to that, bank deposit and bank lending had always been a familiar terms to the society who, when they are intended to save money or when they want to have a bank loan. And even after the heat wave of pandemic, they still share the same benefits. Without further ado, now let's discuss the first advantage of bank deposit. As you can see on the slide, the first one is guaranteed security system. So mostly, depositors are very attracted with this security system that bank provided because it is as if their asset, their things are being protected by the system, by the banking system that they provided. Now, according to the Student N1 2008 articles, so they say that the saving behaviors of depositors often predict their consumptions in a period of time based on their main income. So they intend to save their money to smooth out their consumption in the future. So it is as if they seal their asset in order to act as a shield against the unpredictable fluctuations or the unforeseeable future that you can't predict. So the security system that bank provided very encouraged the depositors to save their money by having a secure account that hold their money in the banking system. So with this guaranteed money security system, it of course attracted the depositors to save their money and become one of the advantages towards the depositors and also toward the bank and financial institutionals. Now moving on to the next advantages of bank deposit. So the next one is maintaining liquidities. So if you look at the financial institutions perspective, when depositors depositing their money, it will help to give benefits to the bank by maintaining their levels of liquidities. So bank liquidities is a very important for the bank institutions to maintain because it will determine the abilities of bank to provide any financings to customers, either new or current customers, or meet the financial obligations. So when bank maintain the liquidity levels, it will also reduce hazards such as bankruptcy. And how can bank deposit actually help to maintain their liquidities? Is because when more of the depositors deposit their money in the bank system, so the bank are able to maintain their liquidities because there are inflows of money. Hence, the abilities of bank institutions will also increase in terms of financing, and thus they can help to maintain their liquidities. So now we want to move on to the last advantage of bank deposit. So we have looked for from the depositors perspective and also financial institutions perspective. So now let's focus on the economics perspective. So depositing money is considered as one of the important aspects in economics because it helps to stabilize the economic growth. This is one of the advantages of bank deposit. So saving money is an action which have direct correlations to a nation's economic growth and prosperities. This is because when customers deposit their money in the banking system, so it means that it can increase the borrowing opportunities which result from an expansion of money supply that come from depositing money. So it means that the banking system can finance more people due to the deposit money supply. So hence consumption, lending, and also the borrowing rate will tend to increase when borrowing is more convenient to the customers. So presumably these activities can run smoothly, thus will help to stabilize the economic growth. And now we have finished about the advantages of bank deposit. So now we're gonna want to move on to the advantages of bank lending. So bank lending is actually one of the tools to finance the purchase of equipment or any startup project to customers. So one of the significant advantages towards the customer is bank loan is temporary. So means that once the borrower had paid off the loan with principal, interest, and also full amount and with on time, the borrowers are not bound to have any involvement with the banks anymore, so they are freed from the banks. So meanwhile, if we use the equity finance to finance our company or any project, we have the obligations to pay dividends to the shareholders. So if a customer choose the bank lending system, it means that they do not have a tied up relation with the bank system itself, unless they want to have another bank lending with another purpose to finance their project. Last but not least, the next advantages of bank lending is it will help to increase the economic growth. So mainly because if we have a strong banking system in our country, it would help to encourage the economic expansions by allocating the loan and also providing liquidities. So as providing bank lending is one of the banking system services that they provided, so when customers have this privilege on access to this credit, it will lead to increased the productions levels of a country and employment opportunities, or even raising the consumer capabilities to spend on more product and services because of this bank lending system. So when these activities keep increasing, it will help to boost up the economic activities and also at the same time increase our economic growth. So that is all for the bank deposit and also bank lending advantages. And now we're going to move on to the next slide, which is the policy implications. Thank you. after.
Assalamualaikum and good morning everyone. My name is Muhammad ZAEIM bin Abdul AFIF. My metric number is 280550. So for today, I will continue the presentation with the policy implication. Regarding the consequences of COVID-19, authorities have applied a lot of measures to support economic growth and maintain their credit flow. By securing their assets and encouraging financial equality policies, certain initiatives improve the ability of bank institutions to lend. Others, such as state-backed debt guarantees or fund reserve for loan scheme, encourage banks to employ their capacity. At the beginning of the epidemic, a solid bank with sufficient funding capacity could handle a substantial decrease in business loan limit. Support of the policy seems to promote additional credit by lending the increase, and as a result, their lending capacity outperformed that of other banks. Bank reporting looser lending rules and stronger loan growth were linked to more generous guarantee plan. Small and medium-sized enterprise benefit from this program by increasing their loan, especially those from sectors that have been badly impacted by the pandemic. Several various policies were put into place by a policymaker in a very short period, and it is varied in every country. Even though it stated that the variety of policies being implemented, it only differs from the specific features of the policies. Meanwhile, the general policy tend to be similar to the others. Many governments, for example, impose payout limitation. However, some kept merely by share buyback and executive bonus, such as Canada and Singapore, whereas other nations restricted the payment of dividend as well, which is in the Eurozone, Brazil, United Kingdom, and South Africa. Similarly, the type of loans accepted under debt moratorium differ widely. For instance, some include all current credit categories, while others just cover loans to certain industries or SME. Additionally, in certain nations like Spain or the United States, payback of loan restriction has been mandated by legislation, while in other nations like Australia and South Africa, policymakers as well as companies have urged them. Number 2. Regarding the influence of the pandemic COVID-19 on economic growth, Islamic bank and financial institutions also experienced certain consequences. Some of the policy implications during the pandemic were the lower overnight policy rate, or we call it as OPR. To speed up the recovery of the COVID-19 damaged economy, Bank Negara Malaysia recently decreased the overnight policy rate by 25 basis points to 1.75%. The maximum and floor rate will be changed to 2% and 1.50% respectively, although this OPR will stay at 1.75% until September 2020. The public and bank are both affected in different ways by decline in OPR. Local bank may lower the base lending rate and base financing rate in response to a lower OPR. Lowering the cost of borrowing or modifying the current loan will indirectly affect interest rates. Therefore, bank would lower the interest rate of existing floating rate loan, resulting in a reduction in borrowers' monthly payment or installment. As a result, the interest rate on the new loan will also follow the existing low level. Next, the policy implication that we can observe based on the impact on COVID-19 is certain sukuk issuers had issues in completing their project. Another instrument in Islamic bank, which is the sukuk, the COVID-19 give a quite significant impact on the sukuk, but in some ways, sukuk have been less affected than other types of financial instrument because it is based on physical asset rather than financial projection or credit rating. Based on the statement that have been proposed by Bandar Al-Hajar, it said that in the wake of sukuk success, the Islamic financial sector urged to promote sustainable and social sukuk as alternative asset classes that have the potential to counter the multifold impact of the COVID-19 coronavirus. Even though the pandemic still had impact on the sukuk, for instance, due to supply chain problem and other pandemic-related obstacles, the underlying asset that support the sukuk may therefore find it more difficult to generate the expected profit. The other policy that have been implemented to enhance lending in the pandemic era is to expand bank lending capacity. And to strengthen this policy, some activities have been conducted, such as using spare balance sheet capacity by the bank to the new lender that offer a favorable risk-return balance at the level where the interest rate will not jeopardize borrowers' ability to pay. Through regulating the level of risk that banks take on and the cost of their funding, public policy has power towards this trade-off and also to the bank lending incentive. Last but not least, credit guarantee schemes have also been provided by the government to encourage banks and other financial institutions to provide loan to SME. These programs entail the government guaranteeing a certain amount of credit which decrease the risk of the bank and increase the likelihood that it would make loans to SME. In some cases, they consist of grant program, direct transfer, tax exemption or deferral, and equity infusion. So that's all from me. Thank you.
Last but not least is the conclusion. After extensive investigation, the COVID-19 epidemic has had a major influence on the banking sector. COVID-19 has already had numerous effects on Islamic and conventional bank deposit and lending. Although Islamic banking is getting less impact than conventional banking, since Islamic banking is based on profit-sharing system. This research examined on how the COVID-19 pandemic is affecting global bank deposit and lending patterns. Thus, the pandemic shock has slowed loan growth in global banking. The pandemic may affect bank loan growth depending on the bank and country. This research examined on how the COVID-19 pandemic increased bank deposit. We also examined whether bank will increase deposit loan more throughout the crisis. The investigation will determine whether the pandemic spending fall cause of the rise in deposit. Forced saving increased bank account due to incapacity to spend. Thus, whether bank that receive deposit increase lending proportionally. So, in conclusion, mobility constraint prevented families from spending money on leisure activities throughout the pandemic. They save it in deposit account. Bank use the increased deposit to expand their real estate lending portfolios. The remarks indicate that household spending decision may impact bank deposit. This change may affect credit supply and economic activity. I think that's all from us. Thank you for lending your time to listen.